Bob Graham here from Riggs Asset Management Company. A week or so ago, we were talking about some of the volatility we had seen in the markets and how we're really looking for the volatility to kind of, if you will, mellow out and have the bond markets and the stock markets and maybe the commodity markets normalize. Well, over the last week or so, we've actually seen that. In fact, the markets have begun to climb higher. Bond markets continue to do well. And the gold markets, precious metal markets, look like they are also improving. We're kind of getting to the end of August and we're coming into Labor Day and all the kids are going to go back to school and we're in this election year period. So we're kind of looking forward to what happens in September. And there's an old adage on Wall Street that in September, leaves and stocks fall. That's been pretty true going back, since 1958. Pretty consistently, September is the worst month of the year. Sometimes in election years, it can be even a little bit more volatile. So how do you get through a September when, historically it's a volatile month? That you're in a very close presidential election, and that can cause some angst, and people will probably start paying more attention to that after Labor Day and the kids are back in school. We kind of go back and we look at history and say, well, what performs best during that time period? And interestingly enough, one of the things that performs really well are precious metals, gold, for instance. The other thing that performs really well is bonds. So the treasury market, the corporate bond market, the municipal markets, those all perform really, really well. Other areas that do well, oil tends to move higher, and international markets tend to do okay. It's a little bit mixed, but on average, they do better than the US market. So as we come to the end of August and the Labor Day weekend is in front of us, just know that your portfolios are well positioned for whatever volatility we may see in September. Our expectation is this going to be a fairly normal September cycle, a fairly normal election year cycle, and you're well positioned with high quality bonds and treasury bonds and corporate bonds and municipal bonds. You're well positioned in gold and precious metals. So your portfolios are really designed to go through this period and dampen out the volatility that we expect. Also, we have great positions that we think are aligned for what's going to happen post-election. As we've said before, typically have a strong beginning of the year up into August. September, October, sometimes early November can be really choppy. But then the year-end rally and in the spring tends to be very, very powerful. So we're protecting both near-term, but also taking advantages that we see will happen after the election. So your portfolios are in a really good position right now. If you have any questions whatsoever, please reach out to your investment advisor. If they're not available, ask for anyone on the Riggs investment team. We're here to help you and can answer whatever questions you have. Thank you very much, and I hope you have a wonderful Labor Day.